212. Are you there, Thicky?
Hey, can hear you. You hear me?
Yes, I can.
Okay, perfect. We're gonna give it maybe like 5-10 minutes before we get started with the fun stuff, just to let people filter in. I've noticed that like when you start spaces, it's best to give it like 30 minutes for people to slowly. It like peaks after like 20-30 minutes of waiting.
What do you do for the first 20 minutes?
I just like chill and like I don't know other stuff. I just let it run.
Okay, okay. Have you have you taken any positions into the weekend?
No, nothing new.
Are you surprised that we're bouncing? Does it hurt you inside in your bearish self to see the prices going up?
Not really. I mean, I think in my opinion, it's kind of just following equities with like a little bit of a lag. So, equities like Nasdaq was up like 2.5% yesterday, so it makes sense that Bitcoin's up like four-ish.
Yeah, this is true.
I'm just glad my equities are going up.
What percentage of net worth do you have in equities?
Um, Not much, maybe like 30, 35.
Okay, that's not too bad actually. That's a decent boomer allocation.
I know, but like if it goes up 5%, it's like a meaningful move for me.
I
I'm
don't
happy.
know. Don't
I
you? Don't
realize
you?
what's
Yeah, go
up.
ahead.
I realize that
No, say it.
you only need to like make 20-30% a year every year. Um, and eventually you just have infinite money.
Well, if you're Brian Johnson, but it takes a lot of years. So the math is not as good as you think. Because I spent a lot of time thinking
Yep.
about this.
Okay, let's hear it.
So it takes a while, and I would say like decades, to get anywhere really, at that rate. You think it's like compounding so fast and 20-30%, it's fine. It's not. It's you do the math. It takes forever. So, um, I'm all for like being patient and building gradually. But if you assume that we're getting debased at like 10%, which in my opinion it's more than like 15%. But let's be conservative and say like your fiat is getting debased at 10%, and you're making 25% a year. Um, I mean, how many years do you think it takes to let's say you're starting with like 100K, which is already, not too bad a place to start. Um, how many years do you think before you make 10 million or something? 100x at like 20% with 10% of it going. You see what I mean? It actually takes
Well,
forever.
I mean, yes, it's very sensitive to your starting point, but
Yeah,
once you get closer to your goal,
I see.
you can grow
I
it a lot
see.
slower.
I see. So what Thicky's telling everybody is that, he's kind of made it, he's got his millions. So at this point, he just needs to run 25%, and then he's
I
on
mean,
cruise
okay,
control.
okay, dog. If you have 100K and you're measuring your P&L in percent, like that's less than like working at McDonald's full time. Like it's not even you can't measure yourself in
What's
percent if you have 100K.
what you should have the same process, right? Like, you shouldn't play differently if you like, I don't know, like 100K is like a starting point that's reasonable to start thinking in percents.
I don't know. Same process, but you need to run a lot higher risk because there's like a large fixed cost to living, and you have to beat that hurdle by a significant amount in order to even make justify being here. Um,
Yeah,
I
it's
think
crazy. Like,
in my opinion, the
you're
process
right.
starts at
Like,
like a
yeah.
million.
You might be right. Like, when we're a little bit like different ages, right? And I remember like when I was graduating, anybody wanted was like to try to there were a few people making six figures out of school, but it was like so rare. Like there were like a couple investment bankers basically, just going straight into like investment banking. That was the only profession paying you like 100K a year. Now, like, my secretary is making 100, like, it's not the same. Um, and that's why I'm saying though, like 10% is a conservative, debasement number as well.
Yeah, that's fair. I mean, the number also the debasement number increases as you go up because like you don't measure it to CPI or money supply anymore. You start indexing it to your luxury goods and your lifestyle, and that
Yeah.
tail end of your expenditures always grows at a quicker rate than everything else.
Exactly. Like, I mean, there's a bifurcation in society between like the asset rich and the asset poor, and the asset rich are buying different things. And the inflation of those things is more like, what's the price of a Formula One ticket? What's the price of like first class airfare, like a five-star
Exactly.
hotel, like a Michelin
Exactly.
star restaurant? Those things are going up quick. And maybe, some basic costs like a TV are not moving, or like a whatever. Electronics obviously like have deflation as well. Um, but I'm quite cognizant of, oh, you're swimming against the current, and if you just sit still and put it in 5% treasuries, it's better than sitting in cash, that's for sure. But it's still not enough.
Yeah, it's by no means a scratch.
That's exactly right. Yeah. So like, uh, I actually feel it's going to get worse. Like the acceleration of this stuff is going to crescendo, and yeah, like a few years ago, like people were debating on Twitter about, is this a number that you retire at? I don't remember what the number was, like 2 million something. Like people were throwing some number. Um, but yeah, we're moving at the speed of light.
We are. I mean, I remember like in 2018, 2019, it used to be like 2, 3 million. And then by like 2020, it was like 5 to 10, and like now it's like 15. It's the number just keeps creeping up at like a very high rate.
Yeah, yeah. And it's funny, like you look at these like small ecosystems, like the poker ecosystem. You have these poker players, and they're occasionally getting fed by the outside world, right? Like there'll be some rich guys that come in and throw some money at games, and all the professionals make a little bit, and then this is kind of like what sustains. And you can kind of see that the stakes at which they're playing are also going up, because the recreational guys, it's one of those luxury goods. It's the same as like a Formula One ticket. Like playing in the Bellagio at Bobby's room is kind of equivalent. And certainly, like, these guys are playing higher and higher stakes. And but on the other hand, did you see the recent net worths of the top 15 billionaires in the world? It looks like Elon's lost like 150 billion or something. Like, there's a little bit of a bumpiness on the road.
I saw that. Yeah, there's a lot of volatility up there. If you want growth.
Yeah, yeah, there is. Except for Warren Buffett, he seems to he seems to be just grinding. Maybe he's done the 25% a year thing, and he's lived long enough to actually it actually works.
Warren Buffett's on Thiccy mode. All
Yeah.
right. I think we're ready to get started.
All right.
All right, cool. Um, so yeah, just a brief introduction of I guess my goal with the start of the series. I talked about it a bit over the last spaces, but for those
Oh.
who's like everyone's like not really incentivized to like share what actually works and what actually doesn't. So like when I first entered, and I read Jack Schwager's like infamous book series, like Market Wizards. It was very impactful on my trading journey, and I still reread it all the time and glean a lot of like useful, like timeless, universal lessons that like still help me to this day. Um, so yeah, like I wanted to start like a sort of similar series in crypto because I think crypto is quite a unique market relative to other markets we've seen in like the traditional world. There are different sets of rules, different game being played, and naturally, the participants that excel in crypto are not going to be the same that sweep the floor in other markets. And yeah, there's a lot of people on Twitter that no one really knows who's actually good at trading and who isn't. There's a lot of LARPs. It's like it's hard to find like verified results. There's a layer of like OPSEC security, shrouding the entire thing where you don't really want to let people know you're a good trader. There's some downsides to it, but anyway, so yeah, I've scheduled like a series of interviews with people that I think are the top traders in this space. Jordi graciously uh, you know agreed to be the first person in this series. I am planning to do like a text version of everything that's spoken in this space today, and that will be like the canonical sort of legacy format. So there will be like edits out of what we say today. So feel free to it'll be cleaned up in post, Jordy. But anyway, I'd like to introduce our first guest, Jordi Alexander. When I first started trading crypto, your account was like one of the first, I think, 10 that I've maybe even the first five that I followed. And yeah, I really looked up to you. I thought we came from like very similar backgrounds in both in HFT and poker. And you've risen to the top of the game in not just one, but like multiple areas of crypto trading. Obviously HFT with what you're doing at Selene, but also discretionary and venture. Um, yeah, thanks for joining us today.
I'm glad to be here, man. It's always good to talk to you.
Sweet. So yeah, you've probably told the story before, but everyone's like always interested in like what the origin story of like a good trader looks like. Is there anything like unique in your childhood that like led you to the path you're on today?
I mean, I guess like playing chess, playing poker, playing bridge was part of my childhood. I took chess and bridge specifically like very seriously in my teenage years, and playing on an international level, competing at like international youth championships and stuff like that gave me both like the confidence, but the one thing that's consistent across my life is being around other top performers and just picking up stuff through osmosis. So, I'm from a small country called Cyprus. I did live in the US for a good part of my childhood, but definitely like in Cyprus, you're not going to see a lot of, world class performers on any level, and getting the chance to play it at this like international level is something that you kind of see the top guy. It was like Magnus Carlsen. He was 13 when I was, well, I'm a little bit older, but he was still around. And Fabiano, you see these kids, and they had like a higher rating than me, even though they were, much younger. And just looking at them and their, um, just the way that they acted and trained was something that I think just helps everybody learn through osmosis. And like you said, I've tried to share stuff for years now. Occasionally, when I have time, I love sharing my process, and I think other people learning through like a similar osmosis is just good for society.
Yeah. Did you have like a natural talent towards these games, or was it something that you had to work on a lot as a kid?
I had a very strong raw talent for sure, and I would define that as like being mathematical, being relatively quick on your feet. I had what is called like a good card sense. Like in bridge, this was kind of obvious. You think about what the other cards other people have, and you kind of start planning around it. So that stuff was very natural to me. I would say. The thing that I lacked for like many years, like deep into my adult years, was the structure and the like taking that raw talent and like directing it properly. And it's cool to see all the people that don't have to go through what I went through, and they're very successful traders from a young age. But for me, it was a struggle taking that raw talent and and applying it properly.
Yeah, I've noticed this trend is that the world has gotten better at like matching talent with like the games that they excel at. Like before, it would take a lot longer, and now so the process is a lot quicker.
Well, look, I mean, partly like it's it's so much easier to get good at things now. I was just thinking about this earlier today. I was watching some high stakes poker championship stuff going on, and nowadays, if you want to learn, whether it's chess or poker, you really have like all these tools like simulations. You can use all these AI tools. You can look at the raw truth, and it's like verifiably correct in a way, versus having to like build up your intuition organically. You make a lot of assumptions and you don't know if you're correct. Like you might have a teacher, he's teaching you something, like, your chess teacher showing you an opening and like he's showing you the move based on, 20 years of theory, but it's actually wrong. Like, there's there's like a bad continuation that they don't know about. Nowadays you can skip through a lot of that. So maybe that's partly why you feel like it's a lot easier and quicker to get good at stuff now.
Fair enough. I mean, I remember back in the day, you used to talk about, you used to have written in your bio too, being like a first principles thinker. Do you think that like having to figure this out on your own, rather than like, I guess the people, the kids of today that are just getting coached and told the truth, do you think that like that sort of muscle has been flexed more given your path?
Yeah, I think so. There's a couple advantages to going the slow route. Um, Certainly, like sitting down and doing the math yourself many, many times gives you some extra intuition that it takes longer. It takes longer to get to a certain level, but also it's such a solid like base to keep building upon because you really you understand things like at a much deeper level. So I played chess from a young age. Then it was bridge. That was my teenage years. Really fell in love with that game. Then poker. From 18, when I went to college, it was a way to actually make money from all this other stuff. So it became not just for fun. It became like a way to gain independence, right? Like from your parents, from people having to pay for you, like being able to take your girlfriend on a trip. Like this stuff was very motivated by just taking your skill set and using it to make money. And after that, there was a period I was doing sports betting, which I would say like really builds your intuition for odds changing in real time. You have to keep readjusting probabilities and those things put together, I guess, a foundation that, yeah, maybe you don't get if you're just, speed running through.
Sorry, my connection dropped a little bit. It's poker in college. Oh, hello. Can you hear me?
Yeah, is my connection? I think my connection's okay. It might be
I think it
yours,
was
but
mine. I think I
maybe the
dropped. I think
chat.
I dropped out. But yeah, so
Okay.
you started playing poker in college. Like, what year was it?
Yeah, I started college 2003. This was literally like moneymaker peak just happened. He just won the World Series. Um, and so, that was like all the rage. And we've seen this thing throughout the last, many years. Like there's a thing where young, smart guys, especially, it can be women as well, um, can just like make a lot of money. And it's like the hot ball of money. And now it's crypto. Maybe in the past it was poker. Maybe it was like daily fantasy for some period. The hot ball can move around.
I mean, if you don't mind me asking, how much money did you make playing poker in college?
Yeah, I mean, I would say like uh enough to pay tuition and like live like a good student life. I think at the time maybe it was like 50K a year type of thing. I was playing pretty big for like an 18, 19-year-old. um doesn't sound like a lot now, but back then it
That's a
was like a
lot.
decent
Yeah,
chunk.
online mostly, like Poker Stars.
Yeah, it was only yeah, so I was playing this scammy site called Ultimate Bet, and
Oh, they're the one that got in
you
trouble with the
know
super users, right?
There was a super user. I did end up playing against the super user. I was like beating everybody, and then like this one guy I was sitting heads up playing limit. He just kept like calling my bluffs with nothing. Like, I would have nine high, he would have like jack high or something like this. And yeah, so I got I had some swings. You have to give back to the cheaters. Um, but this kind of stuff, you start learning about, fairness of games and being exploited, and it's something that served me the rest of my life.
Yeah. So did you like just be a poker pro after college? What was the path after that? What did you major in college again?
So it was econ, not as like a hard, science is like computer science or pure math. Econ's kind of like the a bit looser, but I did get to take a lot of game theory classes and specialize in game theory. Did like a thesis on it. So that was like my path. I also studied psychology. I never really wanted to be like a pure math guy. I like the social aspect of life. So doing a psychology and econ double major was where I landed. And then I didn't really intend to play poker professionally when I graduated. It was meant to be like a part-time thing I was doing, while I was bored in school. So I just moved to New York, and this was 2007. Got a job at one of the big banks, doing some very lame first year graduate stuff, just mainly like paper pushing, some asset management stuff, whatever. And that was extremely boring. Um, I think I did that for maybe like nine months, and then the crisis hit, the 2008 crisis, and I had been playing poker on the side, like sometimes in the weekends and stuff. And at that point, I just decided, out of waiting for the financial crisis to resolve versus just taking matters into my own hands, I preferred to just become a poker pro at that point.
Okay. So was like the poker sort of market not as impacted by the financial crash as like other job markets were?
Yeah, surprisingly, like the I don't know, like uh, the gambling market isn't recession proof exactly, but um, there's a certain element of people that are more active when when the normal market is down, on these types of things. So yeah, it didn't feel like poker changed much. It was still that economy was still doing very well.
Fair enough. And I guess like what was your mindset getting a job instead of like focusing on the poker full time out of college? Because I think the economics probably would have worked out in favor of the poker, just focusing on that. Like, why did you decide to try to get a job in banking?
I guess like always it's like short term versus long term. So short term, yes, like you can probably do better. But the growth on on the poker path, sticking with that for decades, at some point, yeah, you can be Bill Bronson, and just if you love it that much and it's the thing you love the most in life, then I think it makes sense. But for me, like I said, it was always something that I enjoyed, passionate about. I like the competition, but it's not something that I wanted to make my life's work.
Fair enough. Fair enough. And did you also think that like I guess you knew the market wouldn't be around forever?
The poker
Yeah.
market, I don't know. I don't think I thought that it would go away. At that point, it felt like you know people always loved playing cards. Like they were gambling on whist and gin and bridge. All this stuff for decades and decades, and I was kind of steeped in that culture growing up. So I wasn't worried about poker going away. It was just um, you know not necessarily um, something I wanted to do forever. But I did want to give it a shot. So like as soon as I had the first like excuse, which was okay, well it's 2008, it's this financial crisis. I had to tell my parents that I'm not gonna do the Wall Street thing anymore. I'm just gonna move to Miami and play poker. um, got a lot of pushback, especially from my mom. She was not happy at all to be able to tell her friends that her son is a card player. She was like lying to all of them, saying that I'm doing a PhD or something. Uh, yeah. Um, but those years I kind of cherished them. Um, they were years of like a lot of personal growth. When you don't have a structure and you don't have a boss telling you what to do, you kind of have to figure out for yourself what to do, and you have to start taming your ego and taming your emotions. It's such an unstructured life. It's actually like a very difficult life to be a poker pro, especially for somebody who hasn't grown up with like all these, ways of thinking, like, oh, I'm gonna keep a spreadsheet with all my results, and I'm gonna be very proper about what percentage of my bankroll and I'm tracking I wasn't doing any of that stuff. It was purely, oh, I'm good at this. I'm just gonna play anybody at any stakes and then see what happens.
During that period, what do you think the biggest things you've learned about yourself, or the biggest ways you growed were?
Um, on the one hand, like I built confidence that I was, playing against literally the best players, and being able to match up against them, and I wasn't getting destroyed playing against Scott Seaver and whoever were like the best players at the time. Um, so that was good, but on the other hand, like I could see that I was lacking, um, certainly like the emotional resilience. I wasn't like a tilt monkey or anything, but um, I certainly like needed to learn how to handle swings and keep a cool head. And it's quite emotional. I mean, you can imagine if your life depends on you winning, and you start having like a bad month, and you don't have years of expenses saved up. It's extremely stressful. So you kind of start tackling your darkest fears, I think.
Yeah, I can definitely relate to that. I've noticed that, like, a lot of traders that played poker before trading, like they're able to get that sort of tilt management out of the way in poker rather than in trading. Like, it is one of the deadliest sins to have, is this, like, you make a small mistake, it compounds the bigger ones, you tilt, and then you, like, maybe it's boom, you just blow off like half your portfolio rage trading. I do find that, like, poker players have that, they've been through the cycles there more often.
Yeah, there's a thing in psychology that's called the belief in a just world. And some people have like a very strong belief in a just world. Most people, I would say. And belief in a just world is that the outcome is justified. So, you got hit by a car, well, you probably did something wrong. You got uh it's kind of um a way of thinking that is inbuilt in us, I would say, a lot of people. But in poker, there are times where you clearly did the right thing. You put your money in good and you still lost. And it's undeniable that it's not a just world, in a simple way of thinking. Like that doesn't work. And so it kind of does start to train you to just accept that, bad things happen to good people, and bad things happen when you do the right thing, and you can't like control randomness basically, and it just makes you much more comfortable with randomness.
I like that because in poker, it's like, it's very clear when you got it in good and it just didn't work out your way. Like, if you have aces, you go all in, you lose to kings. So it's like you can't do anything about it. But like in trading, so you never have all the knowns. It's like there's always unknown unknowns. So you're never quite sure. Did I make the right decision, or was I just missing something? You never get that sort of feedback loop to be okay with losing after making the right decisions.
Yeah, and there's even more factors in trading, of course, like even how you might make a trade, but how do you size it, and like there's so many elements that have to get optimized, and the unknown unknowns are everywhere.
Yeah, that's fair. I mean, in poker, like you can only bet as much as you have on the table, but in trading, you can bet more. You can bet your entire stack and more with the leverage. So the sizing space is like a lot larger than in poker.
Yeah, exactly. The sort of Kelly criterion adjustment you need to make is hard because in poker, you play a tournament or a cash game, you're gonna lose whatever you have. If you're trying to trade directionally and you think worst case this is gonna go up 2x. So if I short it and it goes up 2x, I'm gonna lose $1,000 and it goes up 10x. You start you start dealing with a probability distribution that maybe wasn't Kelly criterion approved.
Right. So, I mean, see, you mentioned that like you were I don't know if you mentioned the space or you mentioned separately, but you're like in Miami trading. It was like, post, it's like 23 to 25, 27 or whatever. You were in a house with a group of guys all playing poker. How much do you think that helped you being surrounded by like people that were like doing the same thing as you and like fighting the same battles?
Oh, I wish that I was in a house. There are these houses like that you speak of. I was not in one of those houses.
Oh, you were alone.
uh, I mean, I was like living with a girlfriend, and there was like very little help from my environment. It was a bit of a solo task, I would say. Of course, you make friends in poker, and you could still discuss things. But yeah, I didn't have that. We're all grinding all day together and supporting each other kind of thing, which I've seen other people have.
Okay. Was it tough on your relationship at the time?
Um, Maybe. Usually not. I was doing quite okay, so I don't think it affected anything. I didn't really like have like a really bad drawdown necessarily during that period. The only time I had a bad drawdown was after we had a breakup, and at that point it's not going to affect the relationship because the relationship's already over. But I think I was um, at that stage, maybe it was a formative stage where
Right.
you're kind of like having to play this game that requires you to not tilt and be like emotionally, very neutral. And then at the same time, your life is just not not a reflection of that. So that was like a real challenge.
That's like a tough lesson. It's like hard to learn is like kind of like recognizing when you're not fully yourself and just keeping yourself away from the table.
Yeah, I mean, in a sense, at that point, going through like a really bad drawdown and playing stakes I shouldn't be playing. I mean, I
How bad was
started.
the drawdown?
I mean, I lost most of my bankroll. Yeah, like 80-90%. I mean,
Jeez.
I
Jesus.
played like I played super nosebleeds, took a bad beat and just tilted and just blasted more. I didn't like get it in bad in general, but I was just playing way too high where the variance was gonna result in that. And
Around
I would yeah,
around how large was your bankroll at the time?
it's like 400K something like that. Yeah,
Okay,
nothing insane, but
got it.
certainly it was painful. And uh, getting into that depressive period where everything's going badly in your life and you had like a long-term relationship and your like financial security is gone. um you don't know what you're doing with your life because like you've kind of been investing years into a profession that doesn't really have. You're not getting promoted to senior poker player. There's no there's no ladder necessarily you invested in. um I think I had 6 months that are gonna be probably the hardest of my life, where it's just a very dark place. And um I would say that that's being thankfully one of those make or break times. And um it ended up being a blessing, just having that time to introspect and just deal with so many demons I had growing up. Um, you either kind of find your peaceful self and your Zen self, and you get over everything and you start growing, or you just get stuck. And unfortunately, like definitely, like a lot of people get stuck, and in a parallel universe, maybe I would be one of those people. Um, but I had some good friends, and um, maybe just had some inner resilience like that came out in those tough times. And I guess like that, so that this was like 2010, 20, like around 2010, 2011, like around that time. Um, this ended up being a point in my life where I also just decided, okay, poker was fun. I want to get back into like the real the real stuff, not just the game. So I, started taking steps to turning things around.
Got it. So like in 2010 after they banned poker in the states, like what'd you do next?
So, you could still play in other places. There were other sites and stuff to play. So, I was still dabbling and playing a lot, doing a lot of sports betting. I was focusing on tennis and basketball. And at the time, all the software wasn't that advanced, and you could really, if you were quick on your feet, you could, trade live. And I did a lot of Betfair trading, live betting, stuff like this. Um, that ended up being another feather in my hat later as a trader, not just having the all the poker stuff and all that stuff, but then having like live sports betting. I have to believe that that added some intuition, for probabilities and kind of seeing. I feel like I can see probabilities, like distributions for me are like colors. Like I just see it's like a language. It feels like innate to me, and a lot of that was being built around those years. So I was doing that, but at the same time, I applied for an MBA, which was thankful. I got into a top school, and it was quite unusual that they accepted a professional gambler, when everybody else is like a BCG consultant or something. But I got into a 1 year school, and 2012, I did a school year in Singapore. I went to a school called INSEAD, which is a really nice MBA school, and just got experience by being around all these like professional finance people and professional entrepreneurs and all these kind of people, um, and going back to like learning through osmosis and just seeing what people are out in the world are doing.
Yeah, what prompted you to go to Singapore?
I was kind of done with anything US West. I just got a bit, just felt like I didn't really want to stay in the US. I just wanted a new experience, something foreign, something different. Never really like, traveled around Asia much, and yeah, it was fantastic. Obviously, I've since moved here full time, so clearly it was a year that left me with, a desire to return. It was really nice.
When you applied to the business school, like did you write something in your personal statement about, playing poker and playing
I
games in
had
general?
to. Yeah, I mean, they definitely took a while, like a flyer on me. And I had to write these essays explaining how my training in poker is going to be relevant to what I would do next. And I didn't think I was going to be a trader. I thought I was going to do some kind of strategy consulting or something strategy related. I thought that the strategy element was going to be the one that would be like the common theme. But then by the time I graduated and I was doing all the interviews, they get all these on campus interviews and everything. I tried to apply for strategy consulting, but it turns out that um, they didn't really want to hire somebody who wasn't like a suit and tie kind of guy and who was a t-shirt kind of guy. They wanted somebody who was just like, yes, you can do the work, but do you fit the part? Um, and the only job offers I was getting was like from hedge funds.
It's just like analyst.
I mean, like trading. I mean, basically, trading was the only thing offered to me. I didn't really want to be a trader, to be honest, at that time. I thought it was too similar to my previous life, and I would just be back at playing a game. I'm back to like just sitting at a desk and doing the, doing probability and just doing what I've been doing my whole life. I wanted to get out there and do something entrepreneurial, but the only job offers I was getting was like trader, like that. Those people love the poker thing,
They
so
love
they
the
they
poker
wanted
players. Then that
they
was their
they wanted
signal.
to,
Yeah,
yeah. So that's actually like the time I read Market Wizards because like I was getting approached by these, especially this like big hedge fund. The guy like sat with me, had coffee, and he's like, "Look, you have the profile. Like you like I can tell you're a trader, and read these books and read the Market Wizards." And he gave me like his copy, and so I sat and read it. Um, and yeah, I mean it was obviously like tying into my skill set. I ended up accepting my fate at that point that I was going to be a trader. Um, I ended up doing something unusual though. Instead of taking the job with him, which was like a discretionary trading, like a long short discretionary, I ended up probably because I wanted to move to London. I took a job at HFT, which was very strange, given that I had no coding experience. And even like the quant side, so you need two things. You need to be a good coder, and you need to be like very good at statistics. Um, I'm good at math in general, but my formal training on like lasso regressions and all this stuff wasn't something top of mind, after years of just playing poker and stuff. So um I would say that I was severely underqualified for being an HFT trader. But the same thing where like, the CV with the poker and being able to interview well on like any kind of game questions still got me the role. And I just said, look, yeah, everything's becoming more algorithmic. I can either stay in the past and do some of this discretionary stuff, or I can try to go towards the future. And so I accepted the algorithmic trading role.
interesting. So you were trying to like be more forward looking and not just be a discretionary PM at a hedge fund. You wanted to, I guess, dip your toes more into something more future proof. And I think at 2012 was like kind of, it wasn't like the heyday of HFT, but it was kind of like the middle period. Because if I remember correctly, like people were printing the most like in the late 2000s doing HFT. But it was still juicy in 2010 to 2012.
I think they've been juiced. I mean, it's still the heyday. I mean, the people are printing throughout. It's just at the time there were not many firms. So if you were in the space and you were kind of dumb, you still had like one of the few seats at the table, and it was crazy because I joined what at the time was still the top firm in the world called GetGo. This is before they merged with Knight and then eventually Virtu and all this stuff. So they don't exist anymore. But at the time. They were they had the top technology. And I remember on my first day showing up, the my boss was like, "Yeah, so just, make a model trading like euro versus dollar, and you can just put whatever parameters you want. It's gonna make money. Like, no matter what you do, it's gonna make money, basically. Like, you can make the most retarded number. Like, it's still gonna make money because the tech was so good that the speed and everything else, they just had an advantage. So, sure enough, I mean, I put something in, and it was just it's making like $100 a day or something.
Gotcha. Back then, it was just like apes click trading currencies, just like they do in crypto now, right?
I mean, you don't really know exactly, like, especially when you're an HFT, you don't really have like a great fundamental understanding of where the flow is coming from exactly. Um, you're much more focused on, the technical side of things, and at most, you're starting to focus on economic event releases and, statements from the Fed chairman and like all this kind of stuff. But you're not really like thinking about, is this somebody trading on some platform like an eToro, and you don't really think about that.
Okay, fair enough. What were some of the what were some of the meta games in HFT when you joined?
Um, I mean, look, I was definitely like out of my comfort zone. I Before joining, I was told, okay, here's an offer, but you have 2 months to join. You should like learn Python. So, I just went online and Googled teach me Python and tried to get through some exercises and stuff. I mean, I showed up, I was still pretty weak. Um, yeah, I had to find other ways to contribute because I was not going to be the guy like, scripting all this stuff. Thankfully, I did have a reason to exist because all these guys in HFT are very good at coding and being technical, but they don't really have a sense for markets. It's not something that um, is being looked at, and I just started finding all these like really basic improvements, like okay, this model seems to make money every day. It's just like pure pattern recognition. Like, oh, between 4 and 5 p.m. and like, some of these secrets I should have kept to myself. I didn't realize like how hard it is to spot them because they seem so obvious to me. When you were trading Eurex, that last like 45 minutes before Eurex closes, especially like on the Bund Bobble shots markets, there was just like amazing flow. I guess because people were closing at the end of the day and they were just crossing whatever. Um, if you realize that, you could just size up, by like a 5x and just print a ton of money. And this is the kind of stuff that I would just realize and start adjusting our models that nobody across the entire HFT space was even thinking about this kind of stuff. And I remember I mentioned it to like a friend at Jump, and then, years later, he's like, "Yeah, you should have told me that because I ended up, making like millions and millions of dollars." I was like, "Okay." So, um, yeah, I guess I was like uniquely good for the being in that space, and I don't think I was like uniquely good in the world. It's just like everybody else who was thinking like me wasn't being hired by an HFT. So like I was just like in a foreign land.
Right. I mean, I don't know if you had the same experience, but I felt like there was sort of three prototypes of builds at an HFT desk. Like one was like the French or Chinese quant, was really good at statistics. And one was like the developer's developer, really good at low latency tech, understood the systems very well. And then the other
Usually
was like,
Russian. Yeah.
and the last one was like the guy who was like decent, is okay, good enough at coding and statistics, but like he's really just like there for like markets intuition and just like understanding what an edge is and how to monetize it, just like the trader's trader.
Yeah. Yeah. You need a trader's trader. I think at the time there weren't that many of them in HFT. They were still doing, discretionary stuff. Um So, I did end up adding a ton of value and a ton of P&L to them. My team was the highest performing team at Gecko. We were like four guys, and we we kind of crushed it. Um, I basically did some crazy stuff. I mean, I took over the desk. I was like switching off the models at times. I was betting on some mean reversion spots, like crazy stuff. Like nobody does it. Like this is like insane. Like what are you doing? You're turning off the model. I started realizing that there was spots where like US and Europe would diverge and reconverge every day, and I would like manipulate the models to do what I wanted them to do. So my boss had to like pull me aside, and he's like, what are you doing? But at the same time, like you seem to be making a ton of money. So we agreed that we would do an A/B test where I would take all our models, make another version, split the size in half. So, instead of doing 10 lots, it would each do 5 lots, and we would just have two versions. And one of them would run by itself, just run normally all day. And then the other one, I would get to like manually just keep adjusting whatever I was doing. And, we would see what happens. And I guess like I did have some pattern recognition ability because yeah, just over months and months, it was outperforming by like a 3x. So we ended up kind of moving the size to whatever the hell I was doing. Um, yeah, that was a wild time.
I noticed I've noticed that like in the HFT world there is a general skepticism towards people that discretionarily trade. There's just like a skepticism that like do they actually like is there actually edge
Yeah,
here or are they just getting lucky? Like how do you measure it? It's so like nebulous. How did you sort of
exactly.
counteract that at your time there? I guess like your example you just said was like you had to prove to your boss statistically that your decisions were making money. But like, did you have a theme of trying to fight against that?
I mean, this was the only way that they would agree to it was like a long statistical A/B test. Otherwise, it was like, yeah, maybe what you're doing is good, but we don't really know. Um, So managed to do it this way. First started with small size and then ended up kind of doing the big size. But then I got to see like a lot of stuff that influenced me as a manager later on, which was just really bad politics. First of all, you had a firm where the founder was trying to cash out. They had made too much money. They wanted to IPO the company and just retire. Great great guys like these Chicago guys that founded Gecko, but I think at the time they were just like, okay, we've done this for a long time. What's our exit? And the bonuses they were paying were kind of shitty because they were trying to get the numbers good for you know uh their stock debuts and everything. They did a reverse merger with Knight, who had a big blow up. And you could just see the culture fall apart. And you could see that when the top traders don't get paid properly, they start leaving. So people start going to other firms. And it was really interesting because so many of them went to Tower. And even me, I ended up going to Tower as well. And Tower is this funny firm where like the only alpha Tower has is the compensation model. And it kind of showed how important like how you structure compensation is. They literally were the only firm that was doing this profit sharing with all the different teams and pods. And so they just ended up getting all the talent because the top talent of every firm wanted to get a profit share. And that was something that was eye-opening.
Yeah, I mean, I think like people in crypto are very they understand the power of incentives very well. But at the time, it wasn't as well understood.
Yeah, yeah. I mean, it's huge. Incentives are. I always, I've been writing this for years, but incentives are everything.
Yeah, like even like at an organizational level, like employing someone or working under someone is like a trade at the end of the day.
Yeah, yeah, yeah. I mean, especially like if you think about your time as being a limited resource, and you have to think about it strategically.
And like yeah, if it's an organization of traders, like they're obviously going to treat the, who they work for, how long they work, how hard they work as a trade.
Yeah, yeah. They're gonna see like, if I stay up late and do the extra hours, is that gonna matter? Like, is that gonna impact my bottom line enough? So it's helped me design things later on, and now running a firm and having a lot of talented people, having to think about these things and take all the lessons because it's easy to get it wrong. So I've been experimenting with more and more kind of smart ways to incentivize, I guess. But so yeah, that was the next step. Once everyone started going to Tower, I ended up doing that as well. Joined a small team that left Gecko, and that was interesting because you went from a place where everything was already built up, the tech was super mature, had been built for many years, everything was working, and then suddenly you're in a place where there's a bit of stuff, but you're really just, it's kind of more bare metal. Is you have something, but it's nowhere near the level of sophistication. There's a lot more debugging, and you have to kind of just make money. And that was like a place where it did matter what you put in. Like it wasn't going to make money unless you really dialed it right and you really got it. You just have to like figure out how to be MacGyver and just put together like a wire and like a tennis ball and just make money.
What did you trade FX at Tower?
So it was fixed income. Um, so you know, uh, bonds and like rates, all this kind of stuff. So it was mainly fixed income. We did start expanding into other stuff. So I got a dabble of, um, trading oil, trading a little bit of FX, and but it was mainly fixed income. So um, that was useful as well. I ended up building like a very good understanding of the fixed income market, which is probably the most important market in macro.
So would you say you learned a lot of your macro like knowledge you have now from trading fixed income at Tower?
Yeah, Gecko Tower. At the beginning, all we were doing was just putting on the Draghi and the Yellen press conferences, and you just read the Bloomberg articles and try to understand why the markets were moving. It didn't really matter too much in terms of the stats and the algorithms you were running, but it mattered for understanding volatility regimes and when they were changing and when you had to like change your models and stuff like this and why did we make money or lose money today. So you started just being around it, just being steeped in these conversations around the central banks and what they're claiming to be doing. And it was interesting years, especially in Europe. I mean, Draghi was doing a lot of crazy stuff. So that was useful. The team that I was on, fresh team, ended up doing quite well. I mean, the numbers are um, all relative, but let's say like, first year we already made, eight figures, which most teams can't really start off that well. Like it takes, sometimes much longer. Um, so I was there for 2 years. The team was doing extremely well. But I felt like I was contributing a very large amount of that growth. Like my models were really driving a good amount of it. But I wasn't the portfolio manager, and I think that was kind of the point at which I had to decide if I wanted to take a big risk in my career and just bet on myself to start something versus joining something established. And it was a bit scary because I'm not technical. Again, like still don't really have great coding skills even after all those years of HFT. So you think you kind of understand the trade, and you do, but you don't really understand the full tech stack component. And it's not something that I speak the language of. Like other people are much better than me at really understanding the whole tech stack. So that was a bit of a risk, I would say, that I did decide to take in the end.
So you started your own firm, trading fixed income.
So I didn't start a firm, but I did join as a partner in a small firm, and one of the two founders, I had this really strong connection with, where I felt like he didn't understand trading, but he was maybe better than all the devs I had ever seen at Tower or anywhere else. He was just like such a great technologist, and I had the other part. So the combination would make us world class because individually we couldn't do much, but together we could. So I joined as a partner in what was like a 15-person kind of small shop, and they were trading some oil stuff and doing some like random trades. But we spent 6 months building something together, which has kind of become the basis of Selene now. We really built a lot of the code um, with the infrastructure back then. So it wasn't fully starting my own company. I wasn't quite ready for that. It was more like I'm starting my own team, and I'm joining in a place where I have a lot of responsibility, but not quite like I'm running a firm. I don't think I was ready for that.
How old were you when you started it, or when you joined?
So I joined 2016, late 2016. So I was turning 32.
Okay. And had you been familiarized with crypto at this point, or when does crypto start entering the picture?
I just started getting familiar with crypto because the firm was in the Bay Area, which is a very unusual place, but just because that's where they were living. Um, and I had to move there, which I didn't mind. And it's the only place in the world in 2016 where you just randomly having conversations in coffee shops, and people are talking about crypto. Um, I think Bitcoin was like $1,000. I remember like I thought it was expensive, so I bought some Ethereum instead because that seemed cheap. And then uh, I did my first like crypto native trade, which was I realized that Litecoin would pump because it was only whatever, like it was like sub, I don't know, it was like a few bucks. I don't remember what it was, but I realized that there would be this like normie unit bias. So I just bought a bunch of this like Litecoin, ended up selling it at 250 when it just like went crazy. Um, so I was around it. Some of my friends in the area were running like one of the first hedge funds doing crypto. Obviously, it was quite small. Um, but I guess like that was my first exposure.
What were your thoughts on it when you first discovered it? Did it
At first,
click?
I mean, I'd heard about it in 2013 when it was like news about Bitcoin. I think it had like this mini run, and you had these like Bloomberg stories about it back then when I was at the trading desk. At the time, I thought like making base money is hard, and if this thing is trying to be base money, then like it's very small shot. I mean, gold makes sense maybe, but like this thing is just too many people in the world have to agree suddenly that they treat this as a store of value for their own wealth, and it just seemed very far-fetched at the time. So I heard about it 2013, did not buy. 2016, I guess like my reaction was like um kind of positive, especially like the fact that it seemed like there was these other coins, and there's some. I don't know, I felt comfortable with the speculative element, I guess, but I still wasn't thinking about Bitcoin as a store of value at the time.
What was the world consensus view on fiat at the time?
I think like no one really questioned it. Obviously, we were in this like artificial environment of low rates, but I think people were just happy to get out of the financial crisis and sort of get through unscathed, like after a few years. Um, I don't think there was like this big hoopla around fiat at the time. Um, it was more like discussions around the euro versus the dollar, this kind of stuff.
Got it. And I guess when did your firm start trading crypto systematically?
So it's funny. They one of the other the other co-founder, he started getting a few of his interns starting trading crypto pretty soon after that, and I did not end up participating in whatever they were doing. But I remember, they were trading some of the exotic exchanges and trying to do some arbitrage, and then they, would forget where the money, like, the keys and the money. Like, it was, it was just like very wild west, especially back then. I mean, like the exchanges would lose track of it was just completely insane. It's not like it is now. The professionalism level of the exchanges was awful. Um, but for me, I was just doing it on the side, and I had to kind of agree not to spend like too much time on it. So um, I guess like I got familiar with the markets, but I wasn't full time on it. And part of the reason was just it was going so well on the fixed income stuff that it was going to be a big opportunity cost to divert my attention. And there were many nights that I stayed up thinking like, should I just try to do crypto instead? But it was too much of a cost at the time. I wish I did, and I had more of a head start, but I ended up wasting those years, and I felt like a genius in like 2018, 2019. I thought, yeah, thank God I didn't drop everything to do crypto because I'm doing great, and crypto is dying. Um, but it wasn't until 2020 that I personally started doing it more seriously.
Up to this point, correct me if I'm wrong. It sounds like you mainly use your discretionary understanding of markets to like play defense on the market making side, and you didn't start like playing offense on the discretionary side until later on.
Yeah, the discretionary thing is really funny because, like I said, when I started HFT, I was doing these discretionary overlays, which were not encouraged by the firm, but at some point I kind of just forced it down their throat because it was just clear that it was working, so they kind of accepted it. Um, I actually felt like the most exciting thing growing up, in my 20s was being a macro trader. I remember like staying up and reading these blogs and these like I remember what the name of the website is. There's like this Wall Street Oasis kind of stuff or whatever. Like
Oh
people
yeah,
are
I remember
people are
those
talking
forums.
these forums, and like the guy talking about the macro, it just seems so fascinating because he wakes up really early. He has to catch the Asia and see this and all these markets, and it just seemed like such a exciting like problem to be in. Like there's so many factors in it, and it just seemed so fascinating. And here I am running algorithms that are just printing a few cents per trade a million times a day, which is fine. It's great. But what ended up happening is um, I started taking some of the profits from my desk and starting to like put on like just macro, just moving it to a separate account and just trading, just fucking just taking directional, bond bets and whatever equity bets, like index equities and bond bets. Um, and sometimes the volatility would be high. I remember like the first time my like special side account lost 100K. There was some like non-farm payroll number. It came the wrong direction, and I couldn't believe how much it moved in the wrong way. Because that was maybe like my first 100K loss. You're not used to like taking losses when you're doing HFT. Um, and that got noticed, by the other two partners, and got some comments. But my response was like, look, I'm playing with some profits. It's like it's not a huge percentage of the profits. So um again, had to just make the case for it in an environment where it was not welcome. It was not desirable to be doing discretionary trading. Um but I was very drawn to it, and I felt like I wanted to level up, and I was getting somewhere. Um so this kind of continued, and it kept getting bigger, and generally it was going well. So I like did this for 2016 small side, 2017 bigger, 2018 I would swing hundreds of thousands, and 2019 maybe swinging half a million, and uh 2020 was like a defining year for my trading career. I would say that's really where things got a little bit wild.
How come?
I mean, anyone who was trading that year, the COVID shock to the market. Obviously, we had this February, everyone's pretending like everything's good, nothing's happening, markets are just, you know, brushing it off. And then suddenly, like in March, you just get moves that are multi-sigma moves. I mean, they were calling them like 8 sigma moves, which is pretty funny. Like obviously, like your probability distribution is not normal if you're getting eight sigma moves. But you were getting some crazy shit, which made no sense. Like things were blowing up left and right, and people that are professionally putting on trades, like basis trades between, let's say, like the futures and the spot, right? If you're doing it on bonds, you are just facing like insane dislocations at some of those points where I think the entire Citadel would not exist if Griffin didn't call Powell and like ask the Fed to fix it. They were like
Really?
probably a day away from like the entire Citadel not existing. Like
Wow.
that's how bad it literally was, that bad. Like they had to get a bailout, otherwise they would not exist. Like, I mean, their margin call. I mean,
They
you were
would have
seeing
blown up.
crazy stuff, completely blown up,
Didn't
completely
know that.
blown up.
Wow.
Yeah, I think they've kept that secret, but being in the books and you could see what was happening, and then you heard it. You knew what was happening. I mean, just like nonsensical pricing between butterflies and things that normally like have a very fixed structure in the income fixed income curve, just completely broke, and there was no liquidity, so you couldn't even get out. I mean, it was just a wild time. And I think at that point, like having a discretionary um skill set, it kind of saved the firm. We like we were in a spot where like one of the anyway, maybe I can't get into too many details, but let's just say that um, there was a need to do well, that especially like March 2020. Um, there was a need to do well on my side. Otherwise, there were some things not working very well. Um, and at the same time, everyone's worried about their family, their health. Everything's getting shut down. Like there's just like probably the most stressful month, I think, for a lot of people, including myself, having to work while at the same time, just thinking about. Remember, we didn't know like what the virus was, and like how serious it would be. Like just people were dying. That's all we knew. Um, I ended up grinding that entire month, like nonstop, and found some trades that I think worked, but are also like very useful for the market. It was like basically providing passive liquidity for some of these like long term like long end bonds. There was literally nobody in the market. I mean, there were no bids. There was like no. If you look at the books in like March 2020 on CME, like on like ZB, UB, ZN, like there's nobody there. And it's probably just me just putting on like these positions and trying to manage it and just printing money because nobody else is willing to show anything on the books. Um, so I ended up having a very very big month for like a career high kind of month by like a factor of 10 or something. Um, so I guess they kind of like made me believe in myself because just the amount of challenge that specific month was, and sort of surviving it. um and I guess like also making a good amount of money, which I then use later on for growing the firm.
Right. I mean, the discretionary overlays seem it really is vital in these like disaster scenarios where like nobody knows what's going on. You just need to have like a common sense head on your shoulders and do like the simple thing. That makes sense.
Yeah, I mean, you have to be willing to try something. If it works, scale it a bit more. Just yeah, it's like standing on quicksand. You have to just keep jumping around and figure out what to do. But um, yeah, that was a defining month, I would say, both
Interesting.
financially, but also from a like a self-belief kind of side.
Right. I guess the market reaffirmed you that like you were doing the right thing, putting on this discretionary overlay onto your systematic strategies, and I guess also like you had more less skepticism in your own firm that like it was working.
Yeah, definitely. I mean, there wasn't really like a choice. I think at that point, everyone was just it was just chaos and just hoping that everything survives. Thankfully, got through that. The rest of the year was good. I think everybody had a record 2020 in most HFT firms because after like if you survived it, there were some firms that just blew up, disappeared. There were quite a few, but if you made it through, then like for the rest of the year, the flow was just very good. It was just I don't know how to explain it, but it was just very good flow. So 2020 was a very strong year for a lot of trading firms. Um, and the other thing that happened is like the one thing I got wrong that year in discretionary, and like, maybe I gave back like $10 or something, which was not fun. Still had a great year, but like that was not fun. Was I had certain deep understandings of how the economy should function in this kind of environment, and I expected certain things to happen, like high yield bonds, risky bonds should lose value because the fucking world economy is blowing up, and you know there's a lot more risk in a company paying back its debts if the world economy is blowing up. Like that seems like a reasonable assumption, right? Yeah, well, the Fed decided that they're just going to buy all of them. And it's like the referee, it's like you think you're playing basketball and the referee just like starts like taking the ball from you himself and scoring like baskets for the other team, like stuff like it's just like some some things were happening that should not have been happening. Yeah, Tiki, are you there, brother? I think we lost Tiki again. Tiki is DMing that he's having connection issue. Who wants to come on while we're waiting? Got a lot of friends here. Anyone wanna come chat while we're waiting for Thicky to reconnect? Salsa, you wanna come up?